Welcome to the Daily Fortune, where we talk about the latest topics about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so you'll know when we upload a new video. Now let's get started. Since the beginning of 2022, the ARK Invest CEO, Cathie Wood, and her innovation-based investment approach have been smashed, and her flagship fund has now broken beneath $60. 65% has dropped from its previous highs. Cathie Wood was recently asked in an interview about her thoughts if everyone around her is wrong and markets are outrageously mispriced, or if it's now the right time to admit that ARK Invest made a catastrophic mistake. Cathie Wood also discusses the economic ramifications of the Russia and Ukraine war. What does everything mean for Bitcoin, Ethereum, and crypto? And lastly, the best opportunity she's ever seen in her career. If you want to know the answers, keep an eye out until the end of the video, where I'll go through some of the most recent on-chain Bitcoin statistics. And let's see if it supports Cathie's investment thesis. So let's get started. According to Cathie Wood, if we put things into perspective, 60% is correct. There has been a terrible bear market for innovations. However, if we look at the coronavirus from the beginning to the peak on February 21, we'll notice a pattern. She said that we were up 358%. You may be wondering why, but Wood explained that this is because of innovation. Yes, she emphasized innovation as it is effective at resolving problems. But now we're down 60%, and we're dealing with a whole new set of problems originating in Russia and Ukraine. If we look at their strategy over the last 5 years, we'll notice that they're far higher than their minimum hurdle rate of return, which is 15% on a compound yearly basis. She believes that we're getting closer to 25% over the next 3 years. So that helps them to put their performance in perspective. This is an era if you believe in innovation and that innovation solves problems. They saw a glimpse of that after the COVID crisis when many of their strategies and their stocks were pulled down by 75% in a month because they were either burning capital or had low cash cushions. But guess what? Those were the genomic firms who were supposed to bring us out of the coronavirus. And now we have a slew of issues. The most recent one is the Russia-Ukraine war and all of the commodities pouring out of that region, which are wreaking havoc on Europe. She believes that they'll see a lot of demand destruction and substitution in the future entering the realm of innovation. The biggest one would be electric vehicles against gasoline-powered vehicles. They're also experiencing labor shortages all over the place. Automation is the best innovation, and it's being accelerated by the current market situation, which is hitting their stocks. So as Cathie said,
our investment time horizon, 5 years. So we have to believe that one of the technologies, the 14 technologies around which we have based all of our research, is going to inflect within 5 years.
When Cathie was asked by the interviewer about her message to investors who got on the ARK Innovation bandwagon during the coronavirus peak and are now facing losses of around 50% over the course of the year, there's been a very dramatic downturn there. Cathie answered that considering the source and faced with this kind of situation, as an investor, she has a high conviction strategy. She is a firm believer in innovation, that innovation solves problems, and since they have a lot of them in that case, and they average down into a strategy. She also added about inflows, that they had inflows in February, and they've had considerable inflows since January 17th. So I think a lot of our investor base is averaging down. And as an investor, I've done that over my career, especially in innovation-related stocks. And you'd be amazed if you average down over time how quickly a strategy can come back above that average. And if we're right, significantly above that average over the next 5 years. Cathie was also asked about the valuations, since one of the tech companies they focus on that really drive the growth have been underperforming. So about what may occur next year, she was asked of the innovation as a bargain basement territory that she stated before and when investors can expect things to turn around, and what would the catalysts be, especially when interest rates are expected to rise this month in the United States and the oil price is at $130 a barrel. Cathie believes that evaluations should come first. They expect their corporations to invest strongly now. Short-term profitability is being sacrificed in order to take advantage of some of the most incredible potential and exponential growth opportunities. So there are 5 main innovation platforms evolving at the same time as what she shares. It has never happened before in history. You would have to travel back to the early 19 1900s when electricity, telephones, and automobiles were first introduced. We have 5, and they're all convergent, so one S-curve is feeding another S-curve and so on. Take for example Tesla, which she chose it as an example because they were so patient and they were completely correct on that. So that is the convergence. Tesla is simply the convergence of 3 big innovation platforms. Robotics, because autonomous vehicles, which will be Tesla's next significant development area, are robots. Next in line is the energy storage. They will be electric, and if you'll notice, there is an accelerated shift towards electrically powered devices and machineries, especially given what's going on with oil prices. And of course, the artificial intelligence. Autonomous vehicles will be powered by AI. So S-curves feeding S-curves, incredible growth opportunities. If we're going to look at their valuation on their portfolios, they're encouraging their companies to accelerate their investments now so they can get the major shares of many of those winner-take-all opportunities. And so their valuations are roughly 85 times this year if we exclude genomic stocks, which are a separate class. On an enterprise value to cash flow, EBITDA basis, they will have to conduct discounted cash flows on them, but 85 in their assumption is that the valuation will compress to 18 times. They have that in their assumptions, and despite that, they have returned expectations that are greater than any time in Cathie Wood's career. She also shared that the last time they came close to this was at the end of 2018, when they had a snowstorm. The market as a whole had a terrible fourth quarter, and their 5-year compound annual rate of return projection was 42% at the time.
The momentum is in place. The valuations of the stocks in the public equity markets associated with disruptive innovation have been crushed in the last year. But if you look at the private markets, those valuations have not been crushed. If anything, we've seen an escalation. So there's a disconnect here, and we think that the private markets are onto something. And as I just mentioned, our research is pointing to bigger and bigger opportunities as the 5 major platforms around which we have based our research and investing, as they all scale exponentially and converge, one feeding the other.
For Cathie, it's very hard to conclude that they have seen the peak market impact. Markets are being affected today. Generally, the way we see the peak is through the volatility index, or the VIX, which has gone up to the mid-30s. And whereas the shock of 2018 and the one before pushed it into the low 40s, the coronavirus pushed them up to 80. That said, she said that we're coming close to those cathartic moments in the past, and she will be astonished if we do go to the coronavirus. Because remember, people were anticipating a depression. If the entire world shuts down, it's unlikely that this will pose significant problems in terms of purchasing power. She believes that the risk of a recession has increased dramatically as purchasing power has decreased dramatically. In the United States, the consumer saving rate has already fallen to levels not seen since 2013, indicating that the cushion that the government has built up is no longer adequate. Consumers are likely to draw back on stimulus payments made during the crisis, as sentiments say they will. And in some ways, they already have. If you average over the previous 3 months, US consumption in real terms has been fairly flat. So Cathie Wood is seeing recessionary risk rising. As a result of the crisis in Ukraine, and investors are seeing finance used as a weapon, shouldn't that make her more positive or bullish cryptocurrencies and Bitcoin? Cathie said that it's very interesting to watch crypto during this time. She also believes that an increasing number of people are looking for insurance policies against the confiscation of wealth. In Russia and other economies, for example, their wealth confiscation might take the form of inflation or outright seizure. So these figures have been rapidly shifting since January 31st, and they calculated them last week. However, Cathie observed 3 instances of people fleeing to safety. Gold is up the most, crypto is second, and the dollar is third, then long-term treasury bonds. So those yields have fallen down, and the yield curve continues to flatten. Cathie believes we're at 25 basis points these past few days, and we're not far to go before inverted, which has unusually been associated with a recession. For Cathie Wood's last question during the interview, she was asked about what she thinks we will see this month in terms of Fed raise of 25 or 50 basis points, and what does it mean for portfolio construction moving forward. Cathie responded that she thinks Chairman Powell stated 25 basis points, that the market had discounted 7 or 8 basis points, and it made her rethink that she doesn't think that we'll see anything like that, and that price hike in energy and food cost is a massive tax increase on all consumers around the world, and it's more linked with a recession rather than an inflation. So to sum everything up, There's Cathie Wood on why she thinks everyone else is wrong about innovation and that it's mispriced. So do you believe she's right? Or do you think it's just bullish ignorance at this point? If you have any ideas, please leave your comments below. So here we have some updated data on the percent balance of all Bitcoins held on exchanges, which we can use to evaluate if it supports Cathie's investing thesis. So as you can see, even though all the worries we feel, the geopolitical chaos, the uncertainty, there has been no big influx of Bitcoin into exchanges, implying that the vast majority of Bitcoin is still held in cold storage. The strong supply side contributes to the fact that the amount of Bitcoin held by strong holders has never been greater despite everything thrown at the digital asset. It has yet to make a new low. It will be interesting to see how this all plays out, and it's for sure a bullish indicator. So that's it for today. I hope you learned something from today's video, and to get updated with the next videos, don't forget to hit the notification bell. See you next time.